Hey everyone, welcome back to Corporate Decoder, the place where we unpack the financial mysteries that shape our world. Today we're re-diving deep into 60 Degrees Pharmaceuticals, Inc.'s latest report to see what is really going on behind the scenes. Stick around to find out why this company might be doing some serious juggling with its stock. Before we dive in, if you are getting value from these insights, hit that subscribe button and don't miss out on our growing community. Join our Discord server linked in the description below. Alright, let's get straight to it. We're re-looking at a Form 8K filing from 60 Degrees Pharmaceuticals Incorporated, a company that operates in the pharmaceutical space. This report is essentially a snapshot of significant events that happen between their regular, more in-depth filings. The main event we're refocusing on here happened on the 8th of October, 2025. This is when the company held its annual stockholders meeting. Think of it as a yearly check in where shareholders get to weigh in on important company decisions. Now, a quick note on their stock, they got common stock with a very small par value of just $0.0001 per share. This is pretty standard, but the key takeaway is they are a publicly traded company, and their stock is listed on the Nasdaq under the ticker symbol SXTP. They also have warrants, which are essentially options to buy stock in the future, traded under SXTPW. The heart of this report is item 5.07, which details the voting results from that annual meeting. Basically, the company laid out some proposals, and the shareholders voted. To understand the votes, we need to know how many shares were eligible to vote. As of the 29th of August 2025, there were over 4.1 million shares of common stock outstanding. Each share gets one vote. Now, a quorum is like the minimum number of people needed for a meeting to make official decisions. In this case, about 1.6 million shares, or 40% of the total, were represented. This was enough for the meeting to proceed and for business to be conducted. The first major item was electing 5 directors. These are the people who will guide the company for the next year. Let's look at the results. For Jeffrey Dow, there were close to 488,000 votes in favor and only about 46,000 votes against. Interestingly, there were over 1.1 million broker non-votes. This means shares held by brokers where they didn't receive instructions from the actual owner on how to vote. It is a significant chunk, but the directors were still approved with strong for votes. Charles Allen also received a strong endorsement with nearly 489,100 votes for him, and only around 44,800 votes against. Again, a substantial number of broker non-votes. Cheryl Shue got about 472,600 votes in favor, with about 61,200 votes against. Stephen Tuvey saw around 473,600 votes in favor and about 60,300 votes against. Finally, Paul Field received approximately 473,900 votes for, and about 60,000 votes against. All 5 director nominees were approved for their roles. While the support was clear, the high number of broker non-votes might suggest shareholders are either less engaged or perhaps trusting their brokers to vote in their best interest. Next up, Proposal 2 was about approving an amendment to their equity incentive plan. This essentially means they wanted to increase the number of shares available for issuing as stock options or other incentives to employees. They proposed adding 250,000 shares. This measure passed with about 419,000 votes in favor. There were around 111,300 votes against, and just over 3,500 abstentions. This indicates shareholder approval for the plan to grant more stock to their team. Now, this third proposal is a bit more significant. It involves amending the company's certificate of incorporation to authorize a reverse stock split. A reverse stock split is when a company reduces the number of its outstanding shares, usually to boost the stock price. They were considering a range of 1-for-3 to 1-for-10. This proposal received a strong wave of support, with over 1.25 million votes in favor. There were about 1,100 votes against, and around 6,500 abstentions. The shareholder majority clearly voted for the company to have the flexibility to implement a reverse stock split. This is often done when a stock price is very low to get it above certain thresholds for listing requirements or to make it more attractive to investors who might avoid penny stocks. Proposal 4 was a ratification of the board's choice for their independent auditors, RBSM LLP, for the fiscal year ending the 31st of December 2025. It's essentially a shareholder approval of who will be checking the company's financial books. This was overwhelmingly approved with about 1.44 million votes for. Only about 40,300 votes were against, and a pretty significant number of abstentions at over 177,700. But the ratification clearly passed, meaning RBSM LLP will will continue as their auditor. Finally, Proposal 5 was a procedural one. It asked for approval to adjourn the meeting if needed to get more votes for some of the earlier proposals that might not have passed initially. This also passed with a strong majority, getting over 1.38 million votes in favour. There were about 262,400 votes against, and around 9,300 abstentions. This shows the shareholders were trusting the board to manage the meeting process effectively. So, what is the story here? 60 Degrees Pharmaceuticals, Inc. had a clear mandate from its shareholders to proceed with several key initiatives. The election of directors was solid, the incentive plan expansion was approved, and crucially, they got the green light to pursue a reverse stock split. This last point is the most telling. Companies usually consider a reverse split when they are trying to improve their stock S perception or meet listing requirements. It can be a sign that the company has faced some challenges keeping its share price up. The fact that a large majority of shareholders approved it suggests they see the necessity for it, perhaps to avoid delisting or to attract more institutional investors. The high abstention rate on the auditor ratification is something to watch, but it doesn't seem immediately concerning. Looking at the overall picture, 60 Degrees Pharmaceuticals is taking steps to manage its market standing. The reverse stock split, while often seen as a less than ideal solution, can be a necessary tool. The real test will be what the company does with this new flexibility. Will the reverse split be a temporary fix, or will it be part of a broader strategy to improve fundamental business performance and restore investor confidence? The approval of the equity incentive plan suggests they also focused on retaining talent, which is vital in the competitive pharmaceutical industry. To wrap it up, 60 Degrees Pharmaceuticals, Inc. is positioning itself for potential changes. The shareholder votes are clear. They have the backing to move forward with important structural decisions. The reverse stock split is the biggest signal of potential future adjustments to their share structure. What is your take on these votes, and especially on the reverse stock split plan? Let us know in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more corporate deep dives. And don't forget to join our Discord community linked in the description. Thanks for watching and see you next time.